Hello, everybody, and welcome back to the Mouthy Money podcast. I'm joined as ever by Chris Tuite, Head of Consumer Finance at financial communications consultancy MRM. Chris, good morning. How are you doing?
Morning, Ed. All good, thanks. All good. We're hurtling towards spring.
No,
If
I know. Dangerously looking like spring out my window. Although probably a storm or two coming, which I know we've already discussed. But today we are looking again. I know we looked recently at the kind of year ahead for mortgages, but we're looking at some slightly more specific areas around property and the mortgage market today. To do that, we are joined by Stuart Cheetham, who is co-founder and chief executive of digital mortgage lender MPowered. Stuart, good morning. Welcome to the podcast.
Morning. Great to be here. Thanks for inviting me, chaps.
No, absolute pleasure. So the specific issue that we are going to be looking at first, and we're going to be looking at a few different things today, I think, around mortgages and and property buying process and that kind of thing. The first thing we're going to look at is this thing about stamp duty. Now, stamp duty is basically the tax that you pay on purchasing a house. It is a tax on the buyer rather than the seller. Until recently, there was essentially a stamp duty relief in place that gave home buyers, depending on the level and the price of the property being bought, gave them effectively either no tax to pay, depending on the value of the property, or it lowered the amount that was needed to pay. But that's all changing now, and that was confirmed by the Chancellor Rachel Reeves in her budget in the autumn. Now, the first question I'm going to ask, Stuart, as a mortgage lender, one of the big kind of I guess you could call it a rumor or a muttering or speculation, is that people have been rushing to get property purchases in order to beat the stamp duty deadline. What have you guys been seeing? Has that played out in the activity for you guys?
Well, we always love a good rumor in the mortgage world. So it's a good place to start. So it's a bit mixed, I'd say. We're definitely seeing an increase in activity in first-time buyers. We're definitely seeing a greater interest in that end of the marketplace, but it's probably not as big as probably been alluded to in some of the press articles as well. If we think about this, when Rachel Reeves announced this, it gave a very, very short window in reality for people to react. And we all love a good sales by day, but this one in the mortgage world is probably a bit too tight. So you've seen some probably people who are in the process of buying a house or very advanced in that, taking advantage of being able to complete quickly to benefit from the rules as they are. People who are starting from scratch, it probably hasn't been enough of a window to really get through the process. So yes, more, but not as much as you might think.
Yeah, that's the unfortunate news now, isn't it, Chris? Is that basically if you've got this in your mind, or I might save a few quid here. Unfortunately, it's too late. Basically, at this point, isn't it? But
are you looking at sort of 6 months for a housing transaction? I would say, gents, is that fair to say, sort of as an average?
I think completion from offer to completion is running about 4 months on average.
Okay, right.
You can be a lot quicker for a remortgage. Clearly, those averages are including that. Purchases, particularly with chains, are longer, and a first-time buyer might be stuck at the very first part of a much longer chain as well. So you don't quite know, but yeah, right now sitting here in February, yeah, you've probably missed the boat. Yeah.
So
I have heard. Sorry,
yeah, go on. No, Chris,
I've had some conversations around the sort of the relative benefit of this, because obviously some people listening to this, Stuart, might be disappointed to hear that. You know, it's not an insignificant amount of money that you're getting charged with this stamp duty. And I say this as somebody who's benefited from the holidays in the past. I know from experience that was quite a nice sort of chunk of change left over to, get new blinds on the windows and sort out the old boiler that was in the place, all that kind of stuff. So I don't mean to be flippant in any way, but for those who kind of were thinking about rushing to get over, I think there's been some chat about interest rate differentials and tying mortgage deals in now, and actually you might be better off in the longer term if you're a bit more patient and interest rates come down, that you might end up making savings anyway. It's been something that's been mooted in conversations that I've heard. I don't know what your views are on that.
Yeah, well, there's 2 points there. I think it is a shame that the window's a small opportunity, particularly for first-time buyers, because it's incredibly difficult to get on the market for first-time buyers. Anyway, um, and it's not impossible, I would say, for people, but it's highly unlikely at this point. Just to be clear about that. So on to a separate and probably more kind of wider issue of interest rates. So we are expecting another base rate cut this week. However, I think Donald Trump is probably doing his very best to create enough uncertainty that might cause some rethinking on that one. We'll wait and see on Thursday. So, but what you see, so the base rate, it's definitely going to come down. It's slower than we think because of inflationary actions, because of the changes Rachel Reeves has announced, because of some of the stuff happening in the US. But interest rates will come down slower than previously thought. A lot of this, though, has already been baked into the mortgage rates. And so therefore, whether consumers will see bigger rate cuts coming through is a different question at the moment. So, and I think, and so that will be even slower, I would have said, for people. So waiting past the stamp duty date, I don't think you're going to see monumental changes in mortgage rates to offset that, certainly in the short term, i.e. this year.
Yeah, just to illustrate some of what's actually happening with the stamp duty relief. So at the moment, a buyer buying a property at 250,000 and under pays no stamp duty from the 1st of April. Effectively, anyone buying between 125,000 and 250,000, you're looking at a stamp duty bill of £2,500, so £2,500, which is not, for somebody buying a property at that level, which is, really, you're getting nearly as cheap as you can get in the UK at this point. Really, that's not an inconsiderable bill to have to face. If you're buying a £500,000 property, you're looking at a bill going from £12,500 of stamp duty to £15,000. Again, that's another £2,500 hit, but £15,000 on stamp duty is again a lot of money. One sort of technical point on that for people who might have a bit of an issue having that kind of cash on hand to pay a tax bill, can you put that into your mortgage? Is there a way to work that out, or what can people do anything to mitigate it in that sense?
No, not really. I mean, what happens through the process is when you're going through your solicitor process to complete, you have to declare that you've got the stamp duty amount to pay the tax on completion. So what you can do is obviously, if you're, for instance, going for a 90% loan to value, you might be able to go for a 93% or 95% loan to value, and therefore take use a smaller amount of money for your deposit to help offset the tax piece. And that will have a corresponding impact of though increasing your interest rate, your mortgage rate, almost certainly. So, it is a real cost out there, and I think in this economic cycle, there is a recognition that taxes need to be paid. It's a difficult time for us all in this economy. But again, I go back into it's to shame that the Chancellor has made this position on first-time buyers. You could have made a difference for first-time buyers. It's so significantly difficult for a first-time buyer to get onto the housing market. So you didn't need to necessarily treat everybody equally by changing these reliefs. But it is a real cost there. They will have to face into that one. It's very hard to mitigate that.
Yeah, first-time buyer. First-time buyers have a bit of a twin kind of cliff edge here as well, where you think about some of the kind of programs available. We used to have things like Help to Buy. Now we've got the lifetime ISA. So the stamp duty relief at the moment is £425,000 for a property for a first-time buyer, which is that's reasonably generous, on a national basis, because that's still above your kind of average property price. But then also you have the lifetime ISA, which there is a maximum property purchase price. What is it is it £450,000, I think? So you've kind of got a situation there where anybody buying in more expensive parts of the country as a first-time buyer, and I'm talking primarily here, probably the southeast, London, you're effectively having quite a big withdrawal of any kind of, relief from the government. So you can't use a lifetime ISA to get that little bonus on your deposit, and you can't use the first time buyer relief either if you're above a certain level. So it's a real problem, I mean, kind of every level, affordability for first time buyers now, isn't it?
Yeah, I mean, there isn't a lot of help out there to be frank for them, and I think the industry needs to think about this, particularly in light that the government has made its position clear and it is unlikely to change that. I mean, we certainly are looking at, can we be more innovative around products to help first time buyers and things like this. But you are right. I mean, and it's not just the Southeast. I mean, the average house value property price is about 270 in the country. If you get into London, it's nearer 500. Southeast is 450 and stuff like this. But there's always conurbations within Manchester or Leeds or significant places within there are a spike up in prices, and they're normally around, flats and new developments and things like this. So people are getting caught, all around the country on this position. And again, it is one of those things that is very difficult to mitigate in any way, and it is a cost that people have to face into post April going forward.
Yeah, Chris, you were wondering about some of the potential changes to rules, weren't you? For first-time buyers?
You outlined very clearly there, Stuart, the issues that first-time buyers have in terms of the inflationary impact of housing costs and the house prices, and the fact that actually that means that in real terms, either you have to come up with a much larger deposit or you're going to have to borrow more money. At the moment, we've got stress tests set by the FCA, I believe, which lenders need to adhere to, which means that the lender checks whether or not, if the market were to turn, as it has recently, and interest rates were to go up, you could still afford your repayments based on the price of the house that you're buying and the amount of money that you want to borrow in the mortgage. You've mentioned, obviously, stamp duty is a bit of a headwind for first-time buyers, but there is speculation, and there has been speculation in the media this weekend, particularly around ways the government might seek to make it a bit easier for first-time buyers. And one of those is getting rid of that stress test, or at least sort of moving giving a bit more wiggle room for it, shall we say.
Making it less stressful.
It is, exactly.
Yeah.
And allowing bigger loans, essentially, allowing us to take on more debt, or first-time buyers to take on more debt when they're doing that. I see the logic in terms of the practical considerations of that, and you could argue that stress test could be a bit of a straitjacket for some people and might not necessarily reflect their reality. But what's your views as somebody who's obviously very close to first-time buyers and their needs, wants, and what they're able to achieve when it comes to mortgage borrowing? What are your thoughts on that? Do you think it's going to be a good thing, a bad thing?
Well, I mean, I think where the government is, it's almost backed itself into a bit of a corner where this is going to become one of the things it can actually do to put pressure onto the regulator to change these things. And as always, there are pros and cons to anything. Nothing in life is ever this simple, yeah? So that stress test is there because typically people in this country buy a 2 or a 5 year rate. Therefore, what it says is if you buy today, but in 5 years your rate is demonstratively higher, will you still be able to afford that loan at that position? And when we had super low interest rates at 1% or 2% type stuff, which we did sort of 3 years ago, it was a really important feature of that one, because actually what we've actually seen is interest and mortgage rates go up to over 6%. People were forced to remortgage onto those things, and still could they afford them? And actually what we see is actually the repossessions and equities haven't really spiked significantly in that process. So you could argue that actually that rule has been a success in many regards, because otherwise people would have maybe in those years borrowed more and had much more of a problem in this sharp increase. Now, equally, we're in a different interest rate environment. Now we're at higher interest rates, and now we're predicting to go down. So why would we be stressing you to assume an even bigger increase in interest rates when actually everything's starting now to predict to come down in that marketplace? Equally, there's a very valid argument to say that as well. So I think the problem is with this is that it's a very blunt rule, and then with any blunt rule, the way it's used has unforeseen circumstances. So, for instance, there are many people in the marketplace who'd say, if you bought a 30-year mortgage and it was fixed for 30 years, and you take away that interest rate risk, why don't you get rid of the stress test? And I would say it's really logical to do that. In fact, it's almost illogical to have a stress test in that scenario. But if you're buying 2-year rates, I think you're going to be a bit more cautious, because it's very easy for people to really extend themselves into this very emotional process of buying a house, and then very quickly unravel when interest rates do go up, because it is a very fluctuating marketplace. So I think if they just cut the rules carte blanche, I think that might present us some problems. And I think the Bank of England have come out and said that they should be very, very careful about this. I think they should relax them to some degree, though, and I think almost certainly they probably will, because they don't really have a lot of other options to help people in the marketplace, given the overall economic state we find ourselves in.
Yeah.
Now, I think let's take a step back a little bit from this kind of stuff. I think it's time Stuart tells us a bit about his business, MPowered, and obviously why you're kind of really on the pulse of this kind of stuff. Stuart, just tell us a bit about yourself and your background, and then tell us a bit about what MPowered is, how it works, and kind of what the unique selling point there is for the lender.
Yeah, my background is I'm sort of a banker by trade, and I worked at Lloyd's Bank for a very long time and did a variety of different different roles, very good roles there. And then I decided to set this business up about 6 years ago, and we looked at the marketplace and saw technology was having a massive impact across the piece, but very little impact in mortgages. And you looked at the borrowers, and the borrowers were still getting this kind of very stressful, very uncertain, very bureaucratic experience. And why was that? And we decided to set up a lender to address those issues, to make it better. And the whole raison d'etre of that is a consumer or a borrower through a broker can typically buy a mortgage as fast as they could buy car insurance, and very importantly, with the same type of experience. So therefore, I've spent about 15 minutes online. I've filled in some questions. I've sourced my kind of experience. And typically we would do this through a broker, mainly because having advice through this process is typically a good thing. And that's something we're very supportive of, but making that process so simple for brokers, and then immediately being able to deliver certainty faster to them and to their customers. And we've achieved that. So when we receive kind of all the information we require, 96% of the time we issue lending decisions in a day in MPowered mortgages, and we use a whole range of technology, including AI, to make this possible. And it's going to become more and more normal in the marketplace. So right now, if you're looking at the stamp duty, and we'll be able to get you an offer faster than probably anybody else in the marketplace. We'd be able to save you weeks in that process to help you with a sell-by date of this ilk and give you more certainty faster in this situation. Albeit, I would say, even with us right now, it's probably a bit late, so don't want to misset expectations. But through that process, we're using technology to allow the borrowers and brokers to really be able to take the stress out of that process. And that's why we set the lender up.
So in the first instance, people who were interested in kind of your average person who's a home buyer, they would still have to go through a broker, right, to get an MPowered mortgage. Is that right for now?
That is correct for now, yeah.
Yeah. So, I mean, I find the thing that having this kind of like, quick decision stuff, I find it's really interesting. And I think there's circumstances where it could be super useful. The thing that it almost reminds me of is if you've ever done like I have, taken a credit card out and you kind of do the application and then it tells you, this will impact your credit score and that kind of thing. And you press the button and then you get the little cog and you think, oh God, it's like, am I going to be accepted or not?
Exactly, yeah.
It's not quite like that though, is it? You get it's a little bit more because you've got the broker there to hold your hand, and they're always going to look and make sure that you've got your best chance of being accepted, right?
Yeah, I mean, so there's multiple stages through this process, and so a broker will do an advice stage, then they'll do something like a mortgage in principle or an agreement in principle. And if you're with us, basically we pretty much do all the underwriting at that stage because we use technology to do all that. So typically when you've got through that stage, unless something bizarre happens afterwards, you're pretty certain that you know where you're going. And there's no record at that point. It's only when the broker presses submit through that process. And typically, under our technology, anyway, as soon as the broker presses submit, we actually make a decision. Sometimes it's referred back into a human being just to double check some certain things. So, but it is literally everything's done in real time in that process. But again, I mean, when people go through these processes, it is a very emotional decision. It's typically the largest financial decision people make. And so therefore it's a good thing to take advice. I would encourage people to take advice. I just did my mortgage about a year ago. I had a broker to me, he advised me, and I probably chose a different product because of that as well. So I'm a big supporter of that process.
I think, I mean, most people, I think the last time I checked, it was like 9 in 10 borrowers use a broker or something like that, isn't it? So most people do tend to. In terms of the criteria that you guys look at, and obviously because you're able to make these decisions much more quickly than some, competitors, let's say, are there any like criteria or specific points that you're looking at that kind of give a really good indication whether a borrower is going to be, a good person to lend to or not? What are you guys really kind of zoning in on there?
So we do everything that normal lenders do. We just do it just really, really quickly. So typically, we take 20,000 data points on every single customer, where a normal lender uses a decision engine in the background and they call it once. We probably call ours 1,000 times for every single case. So our system is just like talking to a human being, and we're using artificial intelligence behind the scenes to collate and verify and assess data. But in reality, it's exactly like a car insurance application. So when you go on whatever comparison site and you're doing that journey, for a mortgage broker, it is always exactly the same as that process. It takes that long, that type of speed, that type of ease to do that process. And it's completely intuitive. So they type in one thing, it's analyzing that information. It's not static general questions. It's completely dynamic to that individual through that process. And that's the only way you could do it, because it's not like a credit card. The credit card is like, takes 3 data points and makes it a risk-based decision. The regulator quite rightly says that's not right for mortgages. We have to take a lot more data from a lot more sources, so it's a lot more complex. And that's why the technology has to be so much more sophisticated to do that.
Yeah. The point you made about that kind of part of the process is the mortgage in principle. I mean, I have a personal story about this.
Which I've heard several times to listeners and to Stuart. So just to prepare you, we're on a Greaves hobby horse here. Come on, Ed.
Yeah, no, this is one of my favourite property market topics as estate agents. So I'm gonna cut loose here. Well, no, because what happened to me when we bought our house is we used a major national broker, and you go through their digital system, and then at the end of that they give you a mortgage in principle, and then it said something like digital version on it. I can't remember the exact language that was on there. And we made an offer on a house, which was provisionally accepted on the basis that we could show them a mortgage in principle, so we could prove, and I think we had to show them a bank statement as well with a deposit or whatever it was. But, show us the mortgage in principle to prove that you can buy this house, which is fine. That's perfectly understandable, because they don't want to accept an offer from somebody who's then going to be like, oh, actually, I can't afford it. I was just making a random, And anyway, so we gave them this mortgage in principle, which very quickly had back from the estate agent saying, I'm awfully sorry, but this is not a proper mortgage in principle. Actually, you're supposed to get it. This is just a digital, I think they called it this is just from a digital calculator or something like that. And I was like, that's very weird. So then what happened was I then had to go through the entire process with the same broker, but instead of doing it on the tool, on the website, or the digital system on the website, I had to actually be on the phone to the broker. And then they issued something that looked exactly the same, except it didn't say digital version or whatever it was on there. Anyway, this struck me as slightly strange. I don't know if you have thoughts on that. It's slightly arcane attitude, I guess.
I think this is probably, if you had a mortgage broker on here, this is one of the the most hated topics, or so there's I don't quite, I can't speak to your situation. So like if I could, let's say, surmise maybe. So what transpires is in the marketplace is estate agents sometimes will try and encourage the borrower to use an in-house or a preferred broker through that process. And sometimes there is undue pressure put on the situation. Now, this is illegal. I mean, they have to put forward everybody's offer. They can't insist on you using any stated broker. But it happens a lot. If you look on any kind of LinkedIn posts from brokers over a period of time, this will be one of their number one rants, if you like. And it kind of feels a bit like that, to be honest with you, which is really, I mean, borrowers really should be aware of what their rights are in this situation. Is one, a mortgage in principle, they're all digital. It's physically impossible not to get a digital version from anybody in the marketplace. They are really quite simple to get. You can go on any lender's site, do it direct. It take about 15 to 45 minutes, depending on how sophisticated their technology is. You could go to many of the big brokers and they'll do them direct as well, like it would appear you did as well. But they're all very straightforward to get, and that is the standard in the market. Now, you might argue some of these are relatively unsophisticated, and I would argue most of them are. If you look at ours is actually really sophisticated and does most of the underwriting in that process. But that's not their point. Their point was it's not the right version of this. My argument would be that I suspect there's more shenanigans behind the scenes going on there, and people should be able to make sure they don't get, pressurized to go to a broker of not their choosing or go to a process of not their choosing. That is, they should absolutely stick to the guns and do what's right for them in that process.
I won't name any names, but I certainly have had issues where an estate agent has come to me and said, you have to use our in-house broker. And luckily, working in this industry, I was able to say, well, I'm not going to. Sorry.
All right.
And it didn't scupper the sale. Let's just put it that way. The problem is there's a lot of grey areas in all of this process, and it is all a lot of, particularly when you were making applications, you were thinking, well, how can I make sure, not applications, sorry, offers. How can I get my offer to the top of the pile? But, we have
to remember that everyone's buying a house. They're not buying a mortgage. They're not, they don't care about, do I really care about the lender? Do I really care about this process? Now, I've decided that this is the house of my dreams, which is very the emotional part of it. We all kind of fall in love with this house buying process. And all of a sudden you're worried about these things. And the last thing you need is to be bogged down in what is a bureaucratic process anyway with this type of stuff. And you can be swayed and you can be influenced. And people are potentially doing this, not necessarily for the right reasons, which may or may not be the case in your particular scenario. But yeah, so but people should, we need to be clear that people have the right to choose whether to choose a broker, and they have the right not to choose a broker as well. They can absolutely do this direct, and consumer choice has to be king in this as well. And estate agents legally have to put forward any offer. They have no right not to do that in that process. And if they're representing their client correctly, they should properly represent that by saying, here is a good customer with a normal mortgage in principle document. And I suspect that's what actually happened behind the scenes after maybe a bit of arm twisting on your situation.
I was going to close off the anecdote by saying that there wasn't the first time we'd had hijinks from that particular estate agent, and it was definitely not the last either. By the time,
no.
Our property purchase involved us giving them 24 hours to complete something from the conveyancing, or we were going to pull out because we were just so fed up with the whole thing. I won't go through the story. It happened a while ago now.
We'll do a special on it, Ed. We'll do a special on it.
I'll do like a...
You get me back. I have my own rants here as well. Don't get me started. So.
Yeah. Well, we're going to have to get an estate agent or something on here to defend
counterbalance, to be fair. There's loads of good estate agents out there, in fairness. I've come across those too. But it is. I think your point about knowing where you stand and that they legally have to put the offer forward, Stuart, is a really key one, because there is that grey area when you're in that emotional space going, well, what if someone comes in or they know someone or there's something going on that I'm not aware of? How can I make sure I'm on the right side of this, this intermediary between me and the seller often? And you want to try and make sure you put your best foot forward, and every, percentage point you can gain in moving up the priorities goes through your mind. But the facts are the facts and the rules are the rules, and they have to put it forward if it's a serious offer. So it's always worth remembering.
And there's one of these things is like, I mean, I'm not really a mortgage person steeped in years and years of knowledge. I'm relatively new. But even now I look at this and go, where is the one place to go for me to answer all my questions? And there are websites out there, but they're very static. Takes me ages to get through to. If I don't know the jargon, I get confused, and I can imagine get confused. So we are looking internally at the moment to create a website based on generative AI, which is super interactive. But basically, you just come in there and just go, tell me what this rule is. What does stamp duty mean? And what are my rights as estate agents and things like this? And we just opened this up because it just seems to be a massive educational need here, which it is difficult to understand. There is a lot of information here as well through this process, but we do think there's kind of somewhere where we could genuinely kind of champion, for the borrower there to give them access to information in a really super easy way through that process. And I think we are looking at this at the moment because we do see there's a real need there for this.
Yeah, I mean, you do. The thing, and this is the thing with buying properties, it's one of the biggest financial acts you'll ever take in your life, right? It's big, far outweighs anything else, be it getting a home insurance policy or credit card by factors of 10 to 100 kind of thing. And you don't appreciate until you go through it just how much complexity there is in the whole process and that kind of thing, and that can make it so difficult. But I think, I mean, the one takeaway, the one most important tip that I think that I learned, and that I will tell anybody now, friends and things like that who are buying, or anybody listen to me when I'm standing on a street corner shouting with my billboard on, is the thing I learned was that when you're buying a house, the estate agent that you are dealing with is not working for you. They are working for the person who's selling that house to you. And that is one of the most important things that I learned, was that I'm not paying them to do a job. They're being paid by the seller to sell me that house, kind of thing. Which ended up
your friend,
we're looking at things like getting a home buying agent and that kind of thing, and then realizing that I was way too far low down on the property market value level to have a home buying agent. Anyway,
thorough as ever, Ed. Thorough as ever.
I know, absolutely, yeah. Let's. This has been. I mean, there's so much to talk about in this process. I feel like we could go on all day. I think we wanted to talk a little bit now about what the rest of the year looks like. I know we're already in February now, but there's still lots to go, and I know we've touched upon it a little bit there with interest rates. But Stuart, from your point of view, now working as a lender, what are some of the big things you see in the pipeline this year for property buyers, the mortgage market, anything really?
Yeah, so I'm particularly for this year, I think there's some things that are certain now and things that are uncertain. So let's start with the first and go to the second. But the reality is this year, you're going to see very little help from the government in this house buying process. You're not really going to see them influence house prices in any sort of way. Their planning initiatives, albeit on principle look good, but we're years and years away from any of that really having any material impact to this. So really, unless they change that regulation that we just talked about, you kind of know that this is the way it is. So there isn't going to be a massive new savings thing. It's not going to be standard. There is no ability for this government in their current thought process to help first-time buyers in particular, but anybody in the marketplace. So you do have certainty in the sense that you know where you are. There is no help coming, I would say. The second bit, the more uncertain thing, is interest rates. So we just seen the latest announcements from Donald Trump using tariffs on Mexico and Canada. Europe apparently is next. Apparently we're okay. Not quite sure why. But anyway, this is all inflationary activity by him. So this is going to be certainly in the US and in other countries will have inflationary impacts. And the whole global economy is linked. There is no there'll be ripples felt all over the place. This is going to create more uncertainty. And if inflation is not going to come down as quickly globally, that means interest rates won't come down as quickly. So we are predicting interest rates to come down. As I said, we should get a cut this week. But again, that is an uncertain process. So when I looked at this now and I sort of, people ask me, the most common question is what's going to be the interest rate? What's a good interest rate and things like this? So at the moment, you're probably buying an interest rate beginning with a 4. And if you're getting down to the lowest part of that 4, you're doing really, really well. If you're in a high LTV, maybe 90 plus, you might still be in the 5s. Any interest rates beginning with a 3, if you see that this year, that is going to be a phenomenally good buy, I would say. And we might get there, we might not get there, but anything beginning with a 3 is going to be a very good interest rate. And I don't think in the near future, I'll talk 2 or 3 years when you see an interest rate beginning with a 2. Again, we may never see an interest rate beginning with a 2 again. So that's kind of give people, so there is room for interest rates to come down, but not massively. Base rate, the Bank of England rate will come down quite a lot, but a lot of that is factored into mortgage rates already. So low 4s, really good. If you get a 3, you need to bite someone's hand off for that, is probably my prediction for you at the moment.
Yeah. Brilliant. I think that just about covers it off for all the be all and end of the mortgage market. I think I think there's something positive things to take away there, but the interest rates I think is important to be aware of, isn't it? That I think waiting and hoping for rates to come down is perhaps not going to do you any favors at this point. And I know, Chris, we talked about this all the time, haven't we? That get the rate sorted now when you've got 6 months to go, and then see what things are like when you get a bit closer to the time. So yeah.
There's something called the mortgage charter out there. So if you do get an offer, that offer is valid typically for 6 months, and then and if the rates go down, you can always switch. But if rates go up, you just stick where you are. It's almost like it's a free bet, and that's a really sensible thing for people to do that. But I think the industry will. Now it's become clear that there is probably little movement from the government, particularly to help first-time buyers. I think the industry will really start to look at what it can do to innovate products to try and help first-time buyers. We are certainly looking at this right now to try and find different types of product structures to help people get onto the mortgage ladder through that process, considering where we are. So I think it's probably watch this space a little bit on products, but whenever you're buying a house, typically you shouldn't really be buying it on the rate anyway. Work out what you can afford. It's typically a house that you're going to stay for a period of time, longer than 5 years anyway, which is probably the longest rate you're likely to buy at the moment. So it is really about what can I afford and make sure you're comfortable in that process.
Brilliant. That's a really good takeaway. Hopefully a little bit of hope in there for people to have more innovative, more product choice, and hopefully a better mortgage future for everybody. Stuart, thank you so much. It's been really, really a pleasure to have you on. Thank you for joining us.
No, delighted. Thanks for inviting me.
And thank you, Chris, as ever, for being my co-host.
My pleasure. My pleasure. Good to speak to you both.
And thank you to the listeners, as ever. We'll see you again very, very soon. Thank you and goodbye.
Goodbye.
Don't forget to subscribe to the show on Spotify, Apple Podcast, or YouTube. You can also follow all our latest updates on TikTok, Instagram, or X. Finally, check out all our money stories on the Mouthy Money website and subscribe to our weekly newsletter for all the latest straight to your inbox. Thank you and goodbye.